The news that Biden officially signed the Chip and Science Act on August 7 should have greatly boosted industry sentiment, and the help of up to $52 billion in government subsidies for industry research and production should not be underestimated. But the market failed to be excited because chip giants such as Nvidia and Micron Technology have successively announced that their revenue in the second quarter has turned down. U.S. chip stocks have led the decline for 2 consecutive days, among them. Nvidia fell another 4% overnight after falling 6% the day before, giving back its gains since July 27. Micron Technology fell 3.7% to a new one-month low. Affected by this, Intel fell 2.4%, hitting its lowest level since September 2017. AMD fell more than 4%. Giving back its gains since July 29. Not only Nvidia and Micron Technology, but in this earnings season, AMD, Intel, Qualcomm and many other chip giants all stormed. Why? From the performance guidance of Micron Technology for the Q4 fiscal quarter of 2022 released yesterday. You can know a thing or two. The cliff-like decline in PC and smartphone demand is the main reason. Before the market on August 9, Micron Technology lowered its worst Q4 performance guidance again. The company expects fourth quarter adjusted revenue to be at or below its previous estimate of $6.8 billion to $7.6 billion, compared with a consensus estimate of $7.26 billion. The reason, Micron said. The slowdown in demand for personal computers, PC, and smartphones is the key reason. Consumer demand for electronics is rapidly cooling down given the lifting of pandemic lockdowns that has people starting to leave their homes. And the impact of high inflation and a subdued economic outlook on household budgets. So, while Micron executives describe future demand as somewhat weakened, in terms of specific numbers, demand in the chip industry may have fallen off a cliff. PC shipments are expected to fall by 9.5% this year, according to consulting analyst firm Gartner. Gartner also lowered its sales forecast for 5G phones in June. The bottom line is that which chip maker is most closely aligned with consumer demand will be hit the hardest. This law can also be used to explain Intel's sluggish performance due to weak PC sales, and Qualcomm in July, which lowered its forecast for mobile phone shipments this year and issued a bleak sales outlook. AMD lowered its revenue guidance for the third quarter, citing declining demand for PCs, the largest source of revenue, as the main reason, and the pressure will spread to the fourth quarter. Automotive, industrial chip demand may be sluggish at the same time, and now, not only is the outlook for consumer electronics demand bleak, the downturn is spreading to other areas. According to the media, Micron Technology's CEO Sanjay Mehrotra said in an interview, compared to the last earnings call, we saw a further weakening in demand as adjustments extended from consumer sector to other segments of the market such as data center, industrial, and automotive. Micron's chief financial officer, Mark Murphy, also mentioned at a recent investor event that recent concerns for the company we're seeing broader weakness, such as automakers after 2 years of struggling with tight chip supplies, but has now become more cautious about chip demand. Murphy also added that the automotive and industrial demand issues Micron is experiencing are recent developments and it may take a few more quarters to get a clearer picture of the situation.